Hi, Assalamualaikum and good evening everyone. Today my group and I will present about the comparative analysis of Zakat and tax for individual and corporation. In this presentation, we will look at the key difference between Zakat and tax, especially how they apply to the individual compared to corporate entities. Before we begin our presentation, let me first introduce my group member. I am Ami Afifi binti Ahdi. Next, we have Nur Ain Shahira, followed by Stephanie Anziz, then Nur Izati Inshira binti Baharuddin, and lastly, Siti Nurul Atika binti Asnain. To begin, I will briefly introduce Zakat and tax. Zakat is one of the 5 pillars of Islam and it is compulsory duty for Muslim. It is paid on certain type of wealth such as saving, gold, and even business asset. The main purpose of Zakat is to purify wealth and to help those in need in the community. On the other hand, tax is the compulsory payment to the government. It is imposed on both individual and corporation, and it is usually based on income, profit, or other form of gains. The purpose of tax is different from Zakat because it is used to fund national development, infrastructure, and public service for all citizens. So, in short, Zakat is rigorous obligation for Muslim, while tax is statutory obligation for everyone under the law. These two obligations are what we will be comparing throughout our presentation. Next, the scope of chargeability. For individuals, Zakat is only for Muslim. They must pay if they will reach the Nisab and Haul, which means the minimum amount in one full year. It covers income, saving, gold, silver, and investment. For tax, residents are taxed on income from Malaysia and sometimes from overseas, while non-residents are only taxed on income earned in Malaysia, usually at flat rate without relief. For corporation, Zakat is paid by Muslim-owned company based on business profit or asset, while non-Muslim company are in the term of tax, resident company are taxed on income such from Malaysia and non-resident company are taxed only on Malaysia such income such as from business, royalty, or rental. The type of company include SDN, BHD, Berhad, partnership, and foreign branches. I will pass this presentation to Sahira.
Let's continue with basis of calculation of Zakat. I will brief explain the importance of Zakat. Zakat is a fundamental component of the Islamic financial system. It is a compulsory form of charity that requires eligible Muslims to distribute a specific portion of the wealth to designated categories of recipients. In Sabah, the sole authority responsible for collection, management, and distribution of Zakat is the Majlis Ugama Islam Sabah, MUIS, which operates through its Pusat Zakat Sabah. There are two types of Zakat, which is personal that contains 8 types and business that contains 4 types. But today, we only focus with Zakat on wealth and personal, Zakat on earnings, income, and Zakat on business wealth. Before I start, I will show the rate of Zakat. For Hijrah year, we use 2.5% year whole and 2.577% for the year of Masihi. Based on this table, I will show you the comparison of basis calculation and condition Nisab and whole between these 3 Zakats. The basis of calculation for Zakat on wealth are accumulated by wealth and assets. Zakat on income comes from salaries, fees and bonuses withheld based on total yearly earnings instead of money kept for a full year. Meanwhile, Zakat on business wealth is when business Zakat is 2.5% on net assets of Muslim-owned businesses if Nisab and whole are met. Let's move on to the formula of Zakat on income. The Zakat has 2 methods. The gross income method comes first. This is the simplest method, where Zakat is calculated on the total gross annual income. The formula for this method is total gross annual income multiplied with 2.5%. The second method used is net income, allowable deduction method. This method allows the payer to deduct certain basic personal expenses from the gross income before calculating the Zakat. This is often considered more equitable. The formula is total gross annual income minus with allowable basic expenses multiplied with 2.5%. Allowable basic expenses typically include these 6 components. Now, let's take a look to the Zakat on business wealth. The Zakat also uses 2 methods. The first one is the working capital model. This method focuses on the operating cycle of the business. The Zakat base is calculated using the company's balance sheet at the end of its whole. The formula for this method is current assets minus with current liabilities plus or minus with adjustment. As you can see here, This is the component include for each current asset, current liability, and adjustment. The next method is growth model that focuses on the growth in the owner's equity over the whole. The formula is owner equity plus with long-term liabilities minus with fixed asset plus non-current assets plus or minus with adjustment. This is the components include for each owner's equity, long-term liabilities, fixed asset, and non-current assets. Zakat plays a vital role in the Islamic financial system, as it purifies wealth, promotes equitability distribution of resources, reduces poverty, and fosters social and economic justice within the community. I will pass this presentation to Stephanie.
In this section, we will compare how chargeable income is determined for individuals versus companies in Malaysia. The focus will be on the basis of calculation, allowable deduction, zakat treatment, and applicable tax rates. For individuals, the sources of income include salary, allowances, dividends, small business income, and rental income. After calculating gross income, individuals are only allowed to deduct very limited expenses such as repair costs for rental property. Next, we calculate aggregate income, which is then reduced by statutory personal reliefs. These reliefs are fixed amount defined by law such as the 9,000 ringgit personal relief, EPF contribution, insurance, education, medical, and child reliefs. When it comes to zakat, individuals enjoy a tax rebate, meaning the zakat paid directly reduces the final tax payable. Finally, the chargeable income is subject to a progressive tax system ranging from 1% to 30% depending on income levels. So this is the scenario for individual. For if Mr. A has a gross income of 68,000 after reliefs of 24,000 ringgit Malaysia, the chargeable income would be 44,000 ringgit Malaysia. Meanwhile, for companies, the process is different. Sources of income include business profits, investment income, rents, and royalties. Companies can deduct all businesses' expenses that are wholly and exclusively incurred in generating income. This includes staff salaries, office rent, utilities, marketing, and audit fees. Depreciation recorded in accounts is not allowed for tax purposes, but companies can instead claim capital allowance for qualifying assets such as machinery and vehicles. In terms of zakat, companies can only treat zakat as a deduction from income, not as a rebate. Finally, companies are taxed at a flat rate of 24%. However, small and medium enterprises, SME, enjoy a lower rate of 70% on the first RM 600,000 ringgit of chargeable income. So this is the scenario. Company X has a gross income of 520,000 ringgit. After deducting 390,000 ringgit in expenses, the adjusted income is RM 130. Subtracting capital allowance of RM 10,000, the chargeable income becomes RM 120,000, which is taxed at 24%, resulting in RM 28,800 ringgit. When compared side by side, the differences are clear. Individuals rely only on fixed statutory relief, while companies may deduct actual business expenses. Individuals cannot claim capital allowance, but companies can. For zakat, individuals enjoy a rebate, while companies receive a deduction. Lastly, individuals are subject to progressive tax rate, whereas companies are taxed at a flat rate. That's all for my part. I will pass this presentation to Izzati.
Today I will explain about allowable deduction and relief for individual and companies in Malaysia. In our tax system, both individual and companies are given certain deduction or relief. The main purpose is to make sure that the tax is fair and not too heavy. Now, let us look at the table, which is contrast between personal tax relief for individuals and business expenses for companies in Malaysia. Firstly, we have definitions. For individual, tax relief are amount that can be deducted from their income before tax is calculated, while for company, businesses expenses are the cost of running the businesses, also deducted before tax. Next, purpose. For individual, the purpose is to reduce the burden on them and their family, While for company, the aim is to ensure that only the company's profit, not their operating costs, will be taxed. Next, we go to the example. For individual, example includes self-relief of 9,000, EPF saving, education fees, medical expenses, and child relief. While for companies, example includes staff salaries, office rental, electricity, and water bills. In addition, restrictions. For individual, the relief are limited to certain amount fixed by LHDN. For a company, expenses must be related strictly to the businesses. Lastly, effect on tax. For individual, tax relief will reduce their taxable income, while for a company, allowable expenses will reduce the profit before tax. So for this comparison, we can see that both individual and company enjoy deduction, but in different ways. Individual get relief mainly for personal and family support, while company claim businesses related expenses to reduce their taxable profit. Now, I will explain about Zakat treatment for tax purpose in Malaysia. In Malaysia, Zakat is given special recognitions in the tax system for both individual and companies. However, the way it is treated is slightly different. First of all, we have how Zakat is treated. First, individual Zakat is treated as a tax rebate. This means it directly reduces the tax payable, while for company, Zakat is treated as a tax deduction, meaning it is deducted as from income before calculating tax. Next, we have effect on tax. For individual Zakat, we directly reduce the final amount of tax to be paid. For example, if your tax payable is 4,000 and you already paid Zakat 3,000, then the final tax that you need to pay is only 1,000. While for companies, Zakat payment reduce the taxable income. For example, if the company's income is 100,000 and Zakat pay is 10,000, the taxable income become 90,000. Lastly, limit. For individual, the rebate is limited up to the total tax change. If Zakat paid is more than the tax, there will be no refund. For companies, Zakat can be deducted as long as it is paid and support with proof. So the main difference it is, for individual Zakat directly cut the tax amount, while for companies Zakat reduce income first, which indirectly lower the tax. They show that Zakat not only fulfills religious obligation but also plays an important role in reducing the tax burden for both individuals and businesses. Next, I will pass to the next presenter.
So now I will be presenting rates. Here we can see the difference between individual income tax and Zakat. Income tax is progressive, which means the more you earn, the higher the percentage you pay. For example, at 50 ringgit thousand income, the tax is 2,200 ringgit, while Zakat is 1,250 ringgit. But at 2 million ringgit income, the tax goes up to 512,000 ringgit, while Zakat only stay at 50,000 ringgit. This shows that tax increases much faster compared to Zakat, which is always 2.5%. Next, figure 2 shows company tax compared to Zakat. Companies pay a flat 24%, while SME pay 17% on the first 600,000 ringgit and 24% after that. Zakat is much lower at 2.5%. For example, if a company earns 1 million ringgit profit, it pays 198,000 ringgit to 240,000 ringgit in tax, but only 25,000 ringgit in Zakat. This shows that Zakat is consistently higher than company tax. Figure 3, we compare effective rates, which means the percentage of income and profit that is actually paid. Zakat is always fixed at 2.5%. For individuals, the tax rate grows from 4.4% at 50,000 to 25.6% at 2 million ringgit. Companies stay between 17 to 24%. This means Zakat is stable and lighter, while tax gets heavier as income or profit increases. In conclusion, Zakat is fixed at 2.5% under Muiz Sabah, while tax is progressive for individuals up to 30% and flat for companies at 17 to 24%. Overall, Zakat supports fairness and social welfare, while tax provides revenue for government development, making both important but different obligations. That's all for our groups. Thank you.